Hey, what is going on, crypto people? Happy Tuesday. Listen, Digital Asset Subcommittee's first hearing. I like to skip uh the what is it, the scripted speech from the Congress people, especially anyway. I better not mention any names, I might go. So we're past that. So we're gonna cover the live stream from the initial speeches of the people who will be testifying. So we're going to get into that, cover those dudes and dudettes as opposed to the Congress people's initial speech. Ugh. All right. So guys, we're going to get into that. We're going to cover that live stream and appreciate you guys checking in. Again, happy freaking Tuesday to each and every one of you. Let's go over here to this thing. Oh, that's not what I wanted. I wanted this. Cracking guy was pretty good. I don't think
Bitcoin and Ethereum ETFs, growing retail and institutional participation, and increased adoption of digital assets signal an industry not only meeting its potential, but changing how we live. Indeed, the global digital asset market has seen substantial growth with a market cap that currently exceeds $3 trillion. The stablecoin market alone has grown to over $200 billion, demonstrating the increased use of digital rails for payments. Tokenized assets and new blockchain-based transaction rails can improve financial access and inclusion, reduce counterparty risk, improve operational efficiencies, and lower costs. The industry is working to improve on the legacy financial system and solve for gaps that have harmed historically disadvantaged populations. Against this backdrop, other major jurisdictions have recognized that we are in a race to the top in harnessing and benefiting from this new technology. These jurisdictions are delivering exactly what the U.S. digital assets industry has been requesting: regulatory clarity through a thoughtful, tailored regulatory regime that recognizes the potential of digital assets. To that end, it is imperative that the U.S. build upon the progress made during the 118th Congress and ensure U.S. leadership in digital assets at the global level. Increased clarity regarding regulatory expectations will unleash further innovation and ensure that American markets remain the envy of the world. CCI is encouraged by this administration's early efforts to catalyze further digital asset development in the U.S., including recognizing digital assets as a national priority in the recent executive order. More still needs to be done, however, to unwind the significant damage and uncertainty caused by a regulation by enforcement approach under the prior administration. Unfortunately, during Chairman Gensler's tenure, the SEC brought over 125 enforcement actions related to digital assets, but issued no clear guidance or rulemakings to clarify when an asset is in fact a security. This lack of regulatory clarity has driven companies offshore to jurisdictions with more defined rules and less ambiguity. If a regulatory approach is pushing lawful businesses to move offshore, this must change, and we believe that change has begun. In the interest of time, I will briefly outline the specific steps I view as critical to achieving the golden age of digital assets in the US. First, Congress must pass market structure legislation to clarify when a digital asset is a commodity or security, and to give clear statutory authority to the CFTC to regulate the spot markets for digital commodities.
that's another one. Come on and give it.
Legislation should also address risks associated with digital assets markets and technology and provide key consumer protections. Second, Congress should establish a comprehensive framework for the regulation and supervision of stablecoin issuers. Such a bill should also consider rationally integrating effective state-based regulatory models. Accomplishing this would realize the powerful potential of dollar-backed stablecoins, providing individuals with more choice in payments while further solidifying the global role of the US dollar. Finally, Congress and administration should prioritize supporting the development of decentralization and DeFi technologies. Policymakers should recognize the importance of self-custody solutions and software, which enable individuals to securely manage their own digital assets. Congress can unleash digital asset innovation through a forward-leaning legislation. This is the surest way to guarantee that the United States commands the digital asset future while best protecting consumers and fostering economic growth. Thank you so much again for the opportunity to testify, and I look forward to your questions.
Thank you, Mr. Kim. Mr. Garrison, you are now recognized for 5 minutes.
Thank you, Chairman Stile, Ranking Member Lynch, Committee Ranking Member Waters, members of the subcommittee for inviting me to testify today. My name is Coy Garrison. I'm a partner in Stepto's blockchain and cryptocurrency practice, where I've advised clients for the last 3 years. Prior to joining Stepto, I was an attorney at the SEC for about 9 years. I had the honor of serving as counsel to Commissioner Hester Peirce and also serving in multiple roles within the Division of Corporation Finance. I testify here today on my own behalf, not on behalf of the firm or its clients. Congress and this Trump administration have a tremendous opportunity to work together to bring sensible regulation to the digital asset industry. New leadership at federal financial regulators are already beginning to reverse the failed crypto policies of the last 4 years. The SEC in particular has a heavy burden to undo the harmful policy decisions that former Chair Gensler brought, and they have begun the hard but necessary work of rulemaking and providing actionable guidance. However, regulatory actions alone will not be sufficient to stand up a comprehensive regime. Congress needs to fill regulatory gaps by passing legislation for both digital asset market structure and dollar-denominated payment stablecoins. First, I want to underscore that the moment for action is now. The open hostility of the prior administration towards this industry has resulted in a marketplace with no federal regulator, no protections for token holders, and fewer US-based projects. Fortunately, we live in a very different world today. The change at the SEC in particular is a breath of fresh air. Acting Chairman Mark Ueda recently announced the formation of a crypto task force and appointed Commissioner Peirce to lead its efforts. Results were immediate. The SEC rescinded the widely maligned Staff Accounting Bulletin 121. Their work, however, is just beginning and was recently previewed by Commissioner Peirce's announcement of 10 different work streams for the task force. So what can the SEC actually accomplish? I offer the following suggestions, which I believe are consistent with Commissioner Peirce's 10 priorities. First, the SEC should articulate a sound legal interpretation for when digital asset transactions are subject to the securities laws. A clean break is needed from the Gensler era's legal imprecision and sweeping assertion that nearly all digital assets are securities. The interpretation should begin with an acknowledgement that the digital asset itself is not a security. A disciplined transaction-by-transaction analysis must be used to determine whether an investment contract is present because it is required by the case law and should be adhered to by the Commission. Second, the SEC should consider withdrawing Gensler-era litigation alleging unregistered exchange, broker-dealer, and clearing agency activities. As a preliminary matter, it is far from clear that these transactions meet the elements of the Howey test. Even if the new SEC believes that it has jurisdiction over secondary market transactions, consideration should be given to whether beginning a rulemaking process would be a more productive pathway to the registration of covered entities. In an encouraging sign, I note that just yesterday, the SEC and Binance filed a joint motion to stay their litigation for 60 days. Third, the SEC should consider how to better facilitate token offerings in the US by amending existing exemptions and dusting off Commissioner Peirce's token safe harbor proposals. While the SEC can consider these and many other actions, Congress continues to have a vital role in establishing a workable framework. With respect to market structure, I urge the subcommittee to consider the following principles for inclusion in any legislation. The need to establish clear lines between the SEC and the CFTC, and a process to determine which transactions are subject to the different agencies' jurisdictions. Requiring disclosures that are tailored to the needs of digital asset holders. Allowing for disintermediated trading and real-time settlement of digital assets. Imposing similar types of corporate controls and risk management requirements that exist today for securities and derivatives intermediaries, as well as requiring segregation of customer assets and prohibiting the commingling of funds. A second regulatory gap that requires congressional action is federal oversight of dollar-denominated stablecoins. The discussion draft of the Stable Act provides appropriate protections for consumers and establishes a regulatory framework for the issuance and operation of dollar-denominated payment stablecoins. In conclusion, the timing is right for Congress and the administration to work together to implement much-needed regulatory reform. Thank you for your leadership on this important topic, and I look forward to your questions.
Thank you, Mr. Garrison. Mr. Fernandez de Ponte, you're now recognized for 5 minutes.
Thank you, Chairman Style, Ranking Member Lynch, Committee Ranking Member Waters, and members of the subcommittee. Thank you for the opportunity to testify today. My name is Jose Fernandez da Ponte, and I serve as Senior Vice President and General Manager of PayPal's blockchain, crypto, and digital currency business. I appreciate the invitation to address the subcommittee regarding PayPal's vision for the future of digital payments. Today, I would like to focus my remarks on how responsible innovation can enhance payments infrastructure and make the digital economy more efficient for all participants. 25 years ago, PayPal embarked on a journey to digitize payments and take them from offline to online. Now, we continue the journey by moving payments online to on-chain. Our customers can today buy, sell, and hold 4 types of commonly used cryptocurrencies: Bitcoin, Bitcoin Cash, Litecoin, and Ether. Our customers can also choose to check out with crypto and use crypto as a payment method with millions of merchants today. In 2023, we launched PayPal USD, or PYUSD, a fully backed, regulated stablecoin issued in the US by Paxos and developed for commerce and payments. Our objective engaging in the digital asset space and bringing PYUSD to market is twofold. Leverage the latest innovations to provide a faster, cheaper, stable payment instrument and ensure that it has utility for mainstream commerce and payments. With PYUSD, consumers are able to conduct faster and cheaper transactions, send money to loved ones, buy goods and services online, and settle those transactions quickly. Businesses of all sizes can use stablecoins to enable cross-border payments, open new markets, and manage their own treasury more effectively. I would like to share 2 specific examples of how our customers are using PYUSD today. The first one is on domestic business-to-business payments. Large enterprises and SMBs rely on PayPal to securely offer fast and low-cost transfers for business-to-business payments. Today, PYUSD is available to them through more than 25 partners. It has been used, among others, by our own venture affiliate, PayPal Ventures, to fund portfolio companies during weekends and outside of banking hours. It has started to be integrated in popular enterprise resource planning systems, and we use it ourselves to conduct payments to some of our vendors today. Second, let me talk about international transfers to businesses and consumers. Stablecoins like PYUSD can enable efficiencies for cross-border payments. International payments incur in significant cost as they move through the corresponding banking network. To address that, we have enabled US customers of our Zoom product to fund millions of dollars of remittances with PYUSD at a lower cost. When a Zoom user chooses PYUSD as a funding instrument, there are no Zoom transfer fees that are incurred. In addition, on the wholesale side, we have enabled several of our disbursement partners to settle directly with us using PYUSD on the back end of transactions, reducing cost and increasing the velocity of those settlements. At every stage of our cryptocurrency journey, beginning with our buy wholesale product, the launch of crypto transfers, and the go-to-market of a stablecoin, we have been deliberate and methodical in our approach, building trust with customers, regulators, and law enforcement at each step. In terms of policy, we believe that predictable market policy is necessary for the crypto industry to grow and thrive in the United States. We recommend several policies that can help make the US a leader in this technology. First, we urge Congress to pass legislation providing stablecoin and markets and trading frameworks for the industry. Second, a state pathway is critical for the continued growth of the industry. State licensing is the approach that most crypto companies have taken, and it leverages the expertise developed over the years by the State of New York Department of Financial Services and others. Third, federal and state charters can work simultaneously under a core set of standards. In both state and federal regimes, the requirements for reserve asset management, governance, disclosures, and prudential risk management should be fit for the purpose of payments. Finally, any legislation must recognize that the business of payment stablecoin issuance is the business of payments and is not the business of banking, and that payment stablecoins are not securities. In conclusion, the current environment offers an important moment for the US to benefit from a thoughtful and proportionate legislative approach. We look forward to working with you to complete this important task. Thank you.
Thank you. Mr. Massad, you are now recognized for 5 minutes.
Chairman Style, Ranking Member Lynch, Committee Ranking Member Waters, members of the subcommittee and
Mr. Massad, if you could just double check your mic is on. We can hear you, but the live feed may not pick you up.
Is it okay now? Okay. I'm honored to testify before you today. The views I express are my own and do not represent the views of the Harvard Kennedy School. You know, it was in 2014, under my leadership, that the CFTC declared Bitcoin a commodity. And since that time, for over 10 years, I've been calling for strengthening regulation. We hear a lot of calls for clarity, and everybody can be for that. But you can have bad rules that have clarity. We need a regulatory framework that truly encourages responsible development of this technology and not just more of the speculative activity and the abuses that we've seen far too much of to date. I'm going to focus on stablecoins. It's the most useful application of the technology to date, and I applaud the committee for prioritizing that. The Stable Act has many features I support, such as full reserves for tokens, limitations on the activities of an issuer, but there are many areas where it is deficient, and it is substantially weaker than what was negotiated between the former committee chair and the ranking member last fall, which the ranking member introduced yesterday. I want to highlight 5 issues. These are discussed as well as others in more detail in my testimony. First, the legislation provides for federal and state chartering, but there is far too much risk of weak state standards and an inadequate review process, and there is no ongoing federal supervision of state issuers. That's a prescription for a mess. We want people to have confidence that any stable coin is truly stable and worth $1, regardless of what state it comes from. We don't want to provide insurance for that, as we do with bank deposits, so we have to do it through sufficient national standards and supervision. Secondly, the legislation does not address the bankruptcy of a stablecoin issuer. If an issuer fails, the standard corporate bankruptcy process would likely apply. That means you've got the automatic stay, holders will not get their money quickly, and the process could take years. And there could be contagion and significant collateral damage. The legislation needs to create a dedicated resolution process that minimizes those risks. Third, I don't think it does enough to address the risks of financial crime and evasion of sanctions. It says issuers are subject to the Bank Secrecy Act. That's a good thing. But the BSA relies on centralized intermediaries. Stablecoins can be transferred and traded without going through a centralized intermediary, and they can be transferred through an intermediary that doesn't even comply with the BSA. So we need to extend the regulatory perimeter and be more creative in tackling these risks. Fourth, the act is a bit like putting the lock on the barn door after the horses have left when you think about the market today, because it's not clear to me it would even have much impact on Tether. The legislation says it's unlawful to issue a stablecoin that isn't chartered, but there's no enforcement mechanism for that and no penalties. It needs to have those and an explicit territoriality provision. And finally, there are simply many ways the act doesn't give regulators enough authority and discretion, given that this could become a very significant market and it will evolve in ways we can't predict. I want to turn from stablecoins and briefly discuss decentralization and market structure. I'm pleased to see the subcommittee propose that the SEC and the CFTC work together on these issues. I've recommended joint approaches for years now. The challenge with the term decentralization and DeFi is that they're used to describe a lot of things that aren't that decentralized or that still have elements of human control and discretion. So we need to make sure key regulatory objectives like consumer protection are achieved, even if in a different manner. Decentralization is also not a good criteria for distinguishing securities from commodities.
Nope. There you go. And
for these and other reasons, I'm strongly opposed to the FIT21 Act. It's complex, it will generate more confusion than clarity, and could undermine our capital markets. And it's snowing outside. There's often a lot of snow in this room about this issue because the notion of security versus commodity, and people say, well, a digital token can never be a security if it's not part of an investment contract. Well, if I have a digital token that represents a share of GM stock, that's a security, regardless of, how it's sold or transferred. So there are better ways to address market regulation. I discussed those in my testimony. Thank you, and I'm happy to take your questions.
Thank you very much. We'll now turn to member questions. The chair recognizes himself for 5 minutes for the purpose of asking questions. Last week during a press conference with Chairman Hill, Thompson, Scott, and Bozeman, the White House's AI and crypto czar David Sachs said the administration's committed to working with Congress on a market structure and stablecoin framework. While financial market regulators have the power to clear up some of the regulatory ambiguity related to the digital asset ecosystem, there's some obvious gaps where no regulator has jurisdiction. I want to start with you, Mr. Garrison. We'll kind of jump around, just a little rapid fire to stage set here. Can you help me describe some of those gaps and explain how the ecosystem's been impacted by them? For example, is the crypto spot market lack a clear federal regulator?
Yes, it does lack.
And is there a regulatory framework for stablecoin and stablecoin issuers?
There is not.
And is DeFi even contemplated by existing law?
It is not.
And the ambiguous legal classification of digital assets, is a security, is a commodity? That's an open question.
Correct.
Okay, so then, Mr. Garrison, in your view, what would be the outcome to the digital asset ecosystem if Congress cannot get these gaps filled? Will companies move offshore to jurisdictions with regulatory certainty or because of possible enforcement actions?
Yes, I think we see that today.
And would you agree with that, Mr. Kim?
Absolutely, Chairman. We're seeing a lot of American businesses moving offshore due to the lack of clarity in the United States.
And you see the same thing, Mr. Yaham?
Absolutely. Regulatory clarity drives investment and growth for businesses like ours.
Would you foresee the US having to import regulatory standards and market practices from other countries if the United States fails to act, Mr. Garrison?
Yes, that is a likely outcome.
And do you think we're already lagging behind in this space today?
Yes, other jurisdictions, including the European Union, United Arab Emirates, and Hong Kong are further ahead.
And I want to come back to you with there being no standards in the US for some of these crypto companies. Consumers who are trying to vet different projects, different tokens. How is that altering the market with a lack of regulatory clarity in the United States?
There's a lack of consistency in the types of disclosures that are provided and how. There's a lack of consistency in the protections that are provided to persons engaging in digital asset trading.
Let me now jump to you, Mr. Kim, and say, what if we did put in place a framework for stablecoin for the ecosystem to have a regulatory framework governing stablecoin issuances? Those stablecoin ecosystems can actually develop with established legacy financial institutions taking part?
Absolutely, Chairman. A comprehensive stablecoin framework will provide certainty and clarity to the industry, allow for U.S. innovation and leadership, and most importantly, protect consumers and investors by giving them various standards and requirements to best protect the customers as well.
Mr. Fernandez de Ponte, would you agree with that?
I will. It's a strange circumstance that today the majority of dollar-denominated stablecoins are actually issued outside of the US, and there are many jurisdictions that are moving faster in that space. Clarity on the regime in the US would enable American issuers to compete and accelerate financial innovation for the benefit of American businesses and consumers.
And if we provided that regulatory standards for stablecoins, we would be eliminating a major gap in the ecosystem. Is that accurate?
It is, yes.
Okay, so let me continue on. I'm going to come back to you, Mr. Yaham. How do you envision the digital asset ecosystem will change if a federal regulatory framework for digital asset market structure were enacted by Congress?
Well, I think in the first instance, it will allow businesses to plan and invest. It will drive consistency. I think it's also important to keep the international landscape in view. Other jurisdictions have moved forward. And I think as we've seen in other financial market reforms, let's take the Dodd-Frank reforms, for example. Jurisdictions moved in different substantive directions on somewhat similar timelines. The most challenging part of those post-2008 crisis reforms were trying to rationalize cross-border market access for large infrastructure players. These turns into bilateral and geopolitical challenges. And I think we have an opportunity here to avoid those. So I think it's very important that the U.S. Puts a leadership seat at the table.
Thank you. In our final 30 seconds, with new technology, people identify potential risk. And I think we see digital asset skeptics claim that the industry is rife with fraud, with abuse. Could you just very briefly comment on how you're monitoring AML and KYC?
So Kraken invests heavily in the personnel, tools, and technology to detect and prevent illicit finance and any illicit finance being conducted on our platform. We create a very strong ecosystem where we not only monitor and KYC check everyone coming into our environment, but in terms of transactions that come in and out and off of our platform, they're subject to sanction screenings and other compliance tools.
Thank you very much. I yield back. I now recognize the gentleman from Massachusetts, Mr. Lynch, also the ranking member, subcommittee.
Thank you, Mr. Chairman. Mr. Massad, I don't think we should overlook the lessons of the failure of Silicon Valley Bank. In that case, we had a stablecoin issuer who had a huge amount of deposits in a single bank, most of which was uninsured. Just months before the collapse of Silicon Valley Bank and Signature Bank, the Fed, the FDIC, and OCC released joint guidance cautioning banks about the volatility and vulnerability of crypto assets. The everyday American was largely insulated from the fallout of these bank failures, likely because crypto companies, likely because of the risk management systems and heightened capital reserve requirements to insulate most banks. And crypto companies had limited access to the banking sector. I have deep concerns about opening the floodgates for non-bank companies to our payment systems or for Fed accounts. Additionally, allowing crypto companies free rein could put pensions, retirement accounts, and other typically safe investment accounts at risk. The next crypto crash could have disastrous effects on the wider economy. Mr. Massad, what additional risks should this committee consider as it crafts legislation to protect our broader economy and our traditional finance system from the volatility and instability of crypto assets? What safeguards would you recommend, especially with regard to the volatility of crypto to perhaps take down the entire financial industry?
Thank you for the question, Representative Lynch. First of all, I think with respect to the banking system, we certainly don't want banks investing in crypto on the asset side of their balance sheet, meaning, buying crypto or otherwise making investments. I think with respect to other issues like services that are for a fee, like custody or payroll services, I think assuming that we put in a good comprehensive framework on stablecoin issuers so they manage their risks, and on crypto trading platforms so they manage their risks, I think those kinds of banking services, can be done. And
having a firewall between the crypto side and traditional.
Absolutely. And, we need to address affiliations and so forth. But, your point on the concentration of deposits, that's why it's not enough for a stablecoin issuer. As the Stable Act says, you can have bank deposits, you can have all these things, but it doesn't have any rules on concentration or customer concentration. So I'm quite concerned about that. I think this all comes back to looking at this comprehensively and looking at the fact that we really don't have a regulatory framework for a lot of these crypto firms. And we've seen, a lot of fraud and manipulation and problems as a result of that. So I think it has to be done in building blocks. I applaud the committee for starting with stablecoins. I would get that piece done and then turn to the market structure issues, because those are a little more complicated. And I think we'll learn a lot by getting the stablecoin piece done.
What about the contagion piece of this, where you have banks that have access to the discount window, you have FDIC insurance, you've got, and then on the other side of the house, if you've got volatility and instability, you've got sort of co-mingling or association between various crypto companies, so that there's a domino effect that could result.
Yeah.
It actually
There clearly is.
runs into the traditional finance system.
Right. Well, two things. One, that's because of the lack of transparency about this, industry. I mean, sure, the blockchain is transparent in the sense that it's pseudonymous, but you don't know exactly what a lot of the relationships are and who's got exposure. There's a lot of leverage in the crypto industry, and we don't track that. Even in the ETF market, there's a lot
Do you think there should be a prohibition on government bailouts of crypto firms?
Certainly there should be.
Okay.
But the other thing I would comment on is, with respect to the banking sector, we really don't want banks exposed to the credit of this industry. And And that's why I would limit it to, sort of services that are fee-based or, taking deposits that are in dollars. As long as, again, we have some concentration limits.
Thank you, Mr. Chairman. I yield back.
Gentleman yields back. The gentleman from Michigan, Mr. Huizenga, is recognized for 5 minutes.
Thank you, Chairman Style, and I do just want to extend my congratulations to you as well, becoming Chairman of the Digital Assets Subcommittee and having been the former chair of the Capital Markets Subcommittee where a lot of this issues were housed. I know this is complicated and well-deserved, though, on your part, but also congratulations to Chair Hill for seeing that we needed to break this out. I think this is a very positive thing, so I look forward to working with you all. Mr. Garrison, Mr. Yahim, let me start with you. Digital asset market participants have rightfully criticized the lack of predictability and certainty. And going back to 2019, SEC Chair Jay Clayton actually attempted to provide some clarity by releasing a framework for investment contract analysis of digital assets. But we've just seen and just exited the last 4 years where former Chair Gensler famously told crypto firms to come in and register. Whatever that meant exactly. They provided very little direction or way for that to actually happen. Instead, it seemed that firms received was a threat of enforcement for doing so. Is it fair to say that the SEC has thus far not produced desirable or discernible standards for digital asset ecosystem that facilitate consistent application of the rules? Mr. Yahim, Mr. Garrison.
Congressman, thank you for the question. That's absolutely true. There's just been a complete lack of policymaking, and it's been a regulation by enforcement regime using a decades-old jurisdictional test to try to shoehorn the diverse set of digital assets in the market into the securities laws.
And let's just be clear, regulation through enforcement is the bad thing, right?
It is a bad thing.
Okay.
So
Sometimes some of my colleagues and friends don't always see it that way. They just think that that's another tool in the toolbox, but that lack of predictability, I would think, would be very hard.
it's been in stark contrast, Congressman, to, we've watched in many major markets around the world a constructive policymaking process where jurisdictions have crafted definitions, passed legislation, passed regulation. We're in the implementation phase. It has been the exact opposite experience here in the United States.
Mr. Garrison, I want you to answer this part. What must be done to ensure consistent guidance regarding the classification of digital assets?
So I think the SEC needs to take a deep breath and start afresh on its guidance. The 2019 guidance that you mentioned, while well-intentioned, has over 60 factors and no way to actually weigh the different factors. That's simply not actionable.
I think good news is Acting Chair Ueda is seemingly doing that, taking a very different approach. One of his first was to rescind the Staff Advisory Bulletin 121, SAB 121, followed by the creation of Crypto Task Force headed by fellow Commissioner Hester Peirce. So additionally, we've seen the SEC pause some of their pending crypto-related enforcement actions, citing a desire for potential resolution. Mr. Kim, beyond these examples, what other actions could the SEC pursue as far as low-hanging fruit to improve its approach in digital asset regulation that Congress could legislate?
Thank you very much for your question. First of all, I want to just reiterate that it's been so encouraging for the industry to have the SEC Crypto Task Force and the new SEC leadership welcoming and willing to work with the industry. In addition to pausing or withdrawing enforcement actions based solely on registration violations without any allegations of fraud or egregious conduct, it's clarifying some of the issues that the industry has been requesting. What is a security? Clarifying and confirming that a stablecoin that is backed $1-to-1 US dollar denominated is not a security, and just continue to work with industry. The industry wants to work with our regulators to make sure that we can enhance clarity and provide for US leadership.
I've got about a minute left. I want to try to hit a couple of quick things, but Mr. Yahim, in 2023, the SEC went after Kraken's staking program. You operate in over 200 countries, is that correct?
That's correct. Yeah.
Okay, that's a fair number. Being a member of the Foreign Affairs Committee, I know that constitutes much of the known digital world on that. But did any other regulator around the world shut you down as former Chair Gensler did?
no, Congressman, and I think, you know, to put our global operations in context, in those jurisdictions that have advanced clear rules of the road, we've worked with regulators to put those in place, and we are regulatory compliant. There are a lot of jurisdictions that haven't, and, you know, markets operate on a verse solicitation basis, but most of our business is across North America and Europe, where, you know, we see regulation moving forward.
My time has expired, but I will put a question into you all about whether U.S. lawmakers should be concerned what Europe was first out of the gate with some of their regulations and their framework, and what lessons can the U.S. learn from MiCA. So with that, Mr. Chair, I yield back.
Gentleman yields back. The gentlewoman from California, Ms. Waters, who's also the ranking member of the full committee, is recognized for 5 minutes to ask questions.
Mr. Massad, consumer
It's
protections
Massad,
are under attack in this
isn't it?
country, and this will have profound consequences for all of our constituents. As Elon Musk and the Trump administration tried to delete the CFPB, Republicans on this committee have offered stablecoin legislation that is also light on consumer protections. In the legislation I released, there are robust protections for consumer wallets, including risk management and financial resource requirements, to ensure consumers do not lose their payment stablecoins to the scams and fraud that have plagued the crypto industry for far too long. What will it mean for consumers if these protections are stripped away, as Republicans on our committee have suggested?
Well, I think you're exactly right, Congresswoman, that we could see a lot of consumer harm. You know, today stablecoins aren't stable because we don't have this framework around them. And it's not enough just to say, okay, you've got to have full reserves for tokens. We do need to go beyond that. And you've noted some of the ways. And also your point about wallets, I think, is very good. We have to look at this, you know, extend the perimeter here in terms of regulation and look at how these things are transferred. They can be transferred on self-hosted wallets, which raises a lot of issues of evasion of sanctions and financial crime. And unless we really put in a comprehensive framework, we're going to have these problems. I think the bill that the legislation that you negotiated with the former committee chair does a lot of this. It has stronger federal standards. It has standards that go to wallets. It has a dedicated resolution process. So it has a number of features, I think, that would better ensure protection of consumers.
Thank you. Days before being inaugurated, President Trump followed in the footsteps of his co-president Musk to profit off of meme coins. When Trump launched his own meme coin, he warned the speculative dangers and merit risk for investors who would be blocked from class action lawsuits if they were swindled. Trump's profiteering also challenges critical national security and anti-corruption laws now. We're seeing reports that after Trump's token crashed, a large number of investors suffered over $2 billion in losses. According to Chainalysis data, $100 million in trading fees have gone to the Trump family and his partners, while pump and dump schemes run rampant with meme coins. It is clear that early traders, Trump's family, and their partners have been the biggest winners at the expense of hundreds of thousands of investors. And so when I heard about this meme coin, I asked, what is it? They said it's not an investment. It's not a contribution to the campaign. It is all about the president of the United States and then his wife and now his children all being involved in creating their own coins and making money. And those who understand what it means to have the rug pulled out from those who are unsuspecting, this appears to have happened. What do you think about this?
I think it's plainly wrong. And I don't think you need to be an expert about crypto to know that. I mean, look, this is like, you know, paying to join a fan club, except it's a digital token that then you trade and you buy it to trade because you hope that somewhere, someone at some time will pay more for it than you paid. It's clearly contrary to the spirit of the executive order. It's clearly a conflict of interest. It will create ongoing conflicts of interest because companies and countries may now try to buy the coin to curry favor with the administration, and they're going to continue to release additional coins. So, you know, I think it's a black eye for digital assets. It's exactly the kind of behavior we should be trying to tamp down.
Well, just quickly, upon taking office, President Trump signed an executive order banning the creation and issuance of a U.S. central bank digital currency, also known as CBDC. The U.S. is now the only country in the world to impose a presidential ban on CBDC, while China and Europe are free to lead the global competitive landscape. I just get that in there because our central bank, why don't they want our central bank involved?
Well, if I can just add a couple thoughts to that. I mean, look, I know there's a lot of pros and cons about a retail CBDC, but we need the Federal Reserve to continue doing research and development in the area of digital assets. If you want digital assets and tokenization to really grow as a sector, then the federal payments infrastructure must be geared to handle that. And so that's why we need the Federal Reserve to continue to do work in this area. Unfortunately, the executive order suggests it can't.
Gentleman's time.
Sorry, thank you.
Thank you very much.
The gentleman's time has expired. The gentleman from Minnesota, Mr. Emmer, is recognized for 5 minutes.
Thank you to you, Chairman Stile, and to Chairman Hill for your tremendous leadership and partnership on digital asset legislation. I am honored to serve as the vice chairman of this subcommittee, and I'm humbled by the great work already done by your subcommittee. Under President Trump, promises made are promises kept, and a new day for crypto innovation, opportunity, and excellence has finally arrived. Crypto technology shifts economic power from centralized institutions back into the hands of the people. It's transformation. The wrong leadership, our past administration, feared this transformation. They did everything they could to kill it. The right leadership, the Trump administration, welcomes this transformation, will do everything in their power to make the United States the crypto capital of the world. For this reason, we are in a moment to drive real change, to legally anchor the digital asset community, to unlock a peer-to-peer internet with an abundance of opportunity, to be globally competitive with our regulations, to expand the status of the dollar as the world's reserve currency, and to foster in the golden age of America. Doing this requires leading with two priorities. First, we must ensure crypto policy remains nonpartisan. Republicans and Democrats have a 10-year history of working productively together on solutions in this space. That kind of teamwork must remain the status quo. Second, we must craft statutory regulations that honor the core American values that are enshrined in digital asset technology: privacy, individual sovereignty, and free market competitiveness. I'm encouraged by the strong nonpartisan coalition of members on this subcommittee and this full committee who have put up American values at the forefront of crypto policymaking. This Congress, I look forward to supporting this subcommittee as its vice chair in drafting and passing stablecoin legislation and market structure legislation. I also look forward to passing the CBDC Anti-Surveillance State Act, which bans the government from ever creating a central bank digital currency, and the Blockchain Regulatory Certainty Act, which gives entrepreneurs the legal clarity they need to innovate right here in the U.S., and the Securities Clarity Act, which codifies in law that a token is separate and distinct from an investment contract. This committee has long been at the forefront of innovative policymaking for the digital asset ecosystem. In this Congress, I'm excited to see the legislative products of our labor pass and get signed into law. Thank you again, Chairman Stile, Chairman Hill, and my colleagues across the aisle for your longstanding partnership in good faith to unlock an abundance of economic opportunity for our constituents. We have a lot of work ahead, but our constituents can trust that a great bipartisan team here in Congress will bring this across the finish line and deliver for the American people. Again, I'm honored to serve as your vice chairman, Mr. Stile, and I yield back the balance of my time.
We're honored to have you as our vice chair. We look forward to your participation. The gentleman yields back. The gentleman from Illinois, Mr. Foster, is recognized for 5 minutes.
Thank you, Mr. Chair, and congratulations. And thank you to our witnesses, particularly Mr. Massad. Your testimony is really excellent. I read it twice, and I urge anyone who wants to sort of understand the issues here to have a long read on your testimony. One of the points you made in this is the inadequacy of the current corporate bankruptcy codes for resolving for stablecoin. I was wondering if the other witnesses have any comments on that. Do you view the current bankruptcy code as adequate for resolving failed
No.
stablecoins, or do you think we need a separate resolution regime for stablecoin issuers? Anyone wants to? Just raise your hand if you think the current regime is adequate and we don't need a new one. Just raise your hand. Okay, so it looks like all of you agree that we need some kind of new resolution regime for bankrupt issuers of stablecoins. So it really should be on our to-do list on here. Let's see, Mr. Jackman, you emphasized the regulatory oversight over your platform, but as Mr. Massad points out, that's only half the battle. You know, if you accept crypto assets that have been self-hosted, you must need some mechanism to make sure that they haven't been used for, you know, fentanyl purchases or, you know, or North Korean missiles, all this sort of things that are really, you know, key to have that work. How do you ensure that the crypto assets that you bring on board have not been used for these illicit purposes?
Thank you for the question, Congressman. You know, Kraken employs a zero tolerance policy for illicit finance. And if you think about our ecosystem, there is KYC, there are KYC and AML checks for every user that comes on board.
Just to be specific, let's say you've had Bitcoin that's gone through these washers and transferred to other anonymous currencies, and then it shows up in your platform from a self-hosted wallet. How do you have any idea whether that money's been?
Thank you for the question, Congressman. This is the beauty of blockchain technology, and I think this is where the blockchain analytical tools really power this ability to surveil, detect, and prevent this type of behavior. We employ these tools to ensure that not only all the transactions within our environment and on our platform are subject to these screens, but also onboard, offboard, and if we're interacting with other centralized intermediaries, self-hosted wallets that are owned by our customers, those are subject to sanctions.
That are owned by your customer. Yeah, I'm not worried about your customers, the people you KYC'd. I'm worried about people that are out there on the dark web, you know, trading anonymously with self-hosted wallets to buy fentanyl precursors or all the things that are, you know, killing Americans, or the North Korean nuclear missiles that threaten us. So there, it seems like, or if you have a solution to that actually works, I've been asking for it for 10 years and haven't received it. And so if you could have, as you know, for the record, say exactly how you can guarantee that when you bring on a crypto asset, that value has not been used in an illicit transaction. If you could answer that for the record, I'd appreciate it. It's one of the two things that, you know, for one of the reasons why we've actually, you know, over the last 10 or 12 years, passed exactly zero legislation on crypto, is that the two fundamental issues are anonymity and finality. So just, you know, for an example on the finality, why that's so tough, you know, if someone comes, if you're self-hosting and someone comes and puts a gun at your head, drags you into an alley, says, get out your cell phone, transfer all your crypto to me, you know, is it your view that you're just screwed and that's it? You know, that money has disappeared into another self-hosted wallet, wandered off to the dark web? Or do you think that we need some way of tracking it down and find out where it went?
Well, Congressman, I think it's really important to put the market into context here. The crypto markets have reached over $3.5 trillion. 85 to 90% of that activity today goes through centralized intermediaries like Kraken and
It's the
other.
15% that is threatening us with nuclear missiles we cannot stop from North Korea. All right, I'm not worried about the 85%, and I'm not even, anyway, so if you have a solution.
Well, Congressman, if I may, I think the 85 to 90% is what we're here to talk about today. That is why it is so important for the United States to move forward with market structure regulation. If we can, there are many issues to debate over the next several years, but we need to move now and put that basic foundation in place.
Okay,
like
unless
other
the
major
85% is used as an on-ramp for the 15% that's killing Americans. Yeah, Mr. Massad, you look like you wanted to say something.
Well, I was just going to say, you know, when I hear the industry defend it this way, and yet at the same time they want to promote DeFi, so you might say, well, okay, are you willing to somehow restrict DeFi and have everything go through centralized intermediaries so we can have BSA checks?
Thank you. My time's up. Yield back.
The gentleman yields back. The gentleman from Ohio, Mr. Davidson, who's also the chair of the subcommittee on national security, illicit finance, in International Financial Institutions is now recognized for 5 minutes.
Thank you, Chairman, for holding today's hearing, A Golden Age of Digital Assets. Given the title, I think I'll get a question in at least on gold-backed stablecoins. But I want to strongly support legislation that provides legal clarity for payment stablecoins. First, traditional stablecoins are priced at $1 per token, and they are backed by custody of $1 of either cash or cash equivalents like U.S. Treasuries. As the name implies, a gold-backed stablecoin is backed by physical custody of gold. Consequently, with a claim to the gold that's on deposit, each token reflects the market price of gold. Similar commodity-backed stablecoins are obviously viable, but why would anyone prefer a stablecoin of any kind to a traditional bank deposit? Well, first, banks have fractional reserves, and although the risk of a bank default is normally small, cases like Silicon Valley Bank exist. Stablecoins are fully reserved, and they have audited balances of 1-to-1. In the case of dollars, it's $1 per dollar. Or in the case of something like gold, it'd be 1 ounce per token. The other thing is self-custody. So while people, the skeptics, keep trying to undermine the market, the whole point is self-custody, permissionless, which is no intermediary payments. And the idea that you have to go through an intermediary to be trusted basically says that unless the government grants you permission, we just assume you're a criminal, that you're trying to do everything
Right.
that we want to criminalize.
Right.
And there is no decentralized finance without the decentralized part. If you don't protect self-custody, you essentially don't have, all you really do is change which intermediaries are involved. You don't really do that much truly interesting work. So I don't think any serious piece of legislation to try to chart a path for a quote golden age of digital assets could possibly exclude serious protections for self-custody. And I was really pleased to hear you highlight that, Mr. Kim. So, Mr. Yakum, Kraken lists some advantages of gold-backed stablecoins. You obviously have them available. Do you agree that there are advantages to using a gold-backed stablecoin to other stablecoins?
Thank you for the question, Congressman. And to touch on your prior point, thank you for your leadership in terms of helping others understand the importance of self-custody in the crypto markets. With respect to stablecoins, we believe a robust and healthy and competitive stablecoin market is going to be important. We've seen instances where the market, either due to regulation or other forces, has been dominated by a couple players. But again, in Europe, let's look to this example. We've seen the emergence as rules have been put in place, new issuers register and competitive forces at play. And I think that's what we all want for the market. So this includes gold-backed stablecoins. I think there's going to be a lot of innovation in this space, but it's important for the U.S. to put rules in place for issuers. Right now, we see other jurisdictions moving forward, which is requiring every global stablecoin issuer to consider registration in one jurisdiction or another.
Yeah,
And,
I think it's a good point. I mean, I think the big thing the committee's tried to do, and we had witnesses, including Director Harris from New York, and we've had legal clarity in America for years now. We just haven't made it federal. And so some people want to make it only federal and essentially nuke what's worked successfully with a regulatory regime in New York. And look, New York rarely gets regulatory frameworks right in a way that I will applaud, but this is one that seems to have been pretty effective. A lot of times it seems very heavy-handed, but this seems to have worked. We've got people that don't want to recognize that and basically want to eliminate the state-backed stablecoin path. One of the other things that we talked about was, legal clarity. One of the first bills I introduced in this space was the Token Taxonomy Act, and it gets at this idea that there has to be a bright line test. I'm going to rapidly run out of time, but Mr. Massad, is there any place that really doesn't look like a Jackson Pollock painting? I mean, that everyone looks at it and says, this is really a bright line test. This is a security and this is not.
Congressman, thank you for the question. It's very tough, but I think we need to remember that other jurisdictions are struggling with this security versus commodity or security versus something else. Also, Europe has this too. It's whether it's a crypto asset or a financial instrument. The difference is they have in some of these other jurisdictions, because this also exists in Hong Kong and other places, they have more unitary regulation. So it's a little bit easier to.
Well, it is the challenge before us, and we have to get a bright line. I'm sure others will highlight it. Sadly, my time's expired.
If I can just add though on New York, if all 50 states follow New York.
Time has expired. The
I'm
gentleman's
fine with
time
the
has
state
expired. You can enter it for the record. The gentleman's time has expired. The representative from Massachusetts, Ms. Presley, is recognized for 5 minutes.
Thank you to our witnesses for joining us today. There's so much excitement around digital assets, especially cryptocurrency, understandably so. Cryptocurrency is the new thing. It's shiny, it's flashy. People on the internet are always telling stories about how much money they're making on their investments in the latest coin. But the stories that stick with me the most are not on social media posts. They're the ones that I hear in community or that come to my office as casework, like the college student whose digital wallet was drained. They don't know who to turn to for help. Or the elder who lost everything when responding to text messages from a number that was pretending to be their grandchild in order to set up a crypto access account. These stories and many more are the heartbreaking reality of crypto scams, and I believe we all, government and industry, should do everything we can to stop them. Mr. Kim, you are the president and acting CEO of Crypto Council for Innovation. Do you think it is important for government to play a role in reducing scamming and fraudulent activity through cryptocurrency?
Thank you very much for your question, Congresswoman. As a general matter, it's extremely important for any kind of illicit activity to be stopped. NCCI is committed to coming up with policy solutions. My opinion is that the best way to accomplish this is through a comprehensive federal framework for both market structure and payment stable coins to make sure there are consumer disclosures, that there are consumer protection standards, and all of this information can help prevent scam. At CCI, we run different types of educational aware campaigns with our members to make sure these types of scams do not come to be. In the US, centralized exchanges, as my colleague to the right of me mentioned, they are subject to robust AML CFP oversight, but no amount of counter-illicit activity is acceptable. And CCI is committed to working with you and your office to making sure that we promote awareness and education to best stop consumer scams.
Thank you. My next question is for the entire panel of witnesses. So please raise your hand if you oppose crypto scams and support protecting consumers. Excellent. Let the record reflect that every single witness today raised their hand. I'm glad we can all agree on that, but it's not enough to simply talk about it. We need to be about it. And that's why I want to bring attention to the Consumer Financial Protection Bureau. This small but mighty government agency is one of the top watchdogs fighting hard for working class people and their bank accounts. And that's precisely the reason Elon Musk is trying to kill it. If you're not familiar, the CFPB has put $21 billion, that's with a B, dollars back in people's pockets. And when it comes to digital assets, CFPB collected data from consumers and found that 40% of crypto asset complaints were about fraud and scams. They then use that information to develop resources for consumers and prioritize regulations for crypto firms to reduce predatory behavior. But the agency is now under attack. Elon Musk and his so-called Doge Bros have kicked out the employees, locked the door, and stopped all the work from continuing. They did it with the blessing of our scammer and harmer in chief, Donald Trump. Earlier this year, Trump launched his own cryptocurrency meme coin. He promoted it on social media and people invested in it, but then it quickly lost value, roughly 40%. When Trump insiders pulled their money for a profit, resulting in working class people stuck with the losses. It was a scam. So let's be clear. On one hand, Donald Trump will steal from people through a crypto scam. On the other hand, the hardworking staff at CFPB will fight to get people their money back. And that's why we need this essential agency to be reopened to finish its necessary work. Mr. Massad, the Consumer Protection Financial Bureau, before it was attacked by Elon Musk and Doge, proposed that crypto payments are subject to the Electronic Fund Transfer Act. Why do you think that is important?
Well, I think, Congresswoman, thank you for the question. I think we have to have a complete framework of regulation, and particularly given the fact that the industry likes to push back against whatever regulator is trying to do something. And to your point about shutting down the CFPB, we cannot build strong financial markets if we're going to sort of regulate by a pendulum swing, you know, sort of go way over here, one administration, then go way over here, the other administration. I mean, reasonable people can disagree with some of their rules, but you don't shut down the agency.
Thank you. I yield back.
The gentlewoman yields back. All members are reminded to refrain from engaging in personalities towards the president. The gentleman from Tennessee, Mr. Rose, is now recognized for 5 minutes.
Thank you, Chairman Style, and thank you, Ranking Member Lynch, for holding this hearing, and thank you to our witnesses for taking time to be with us today. One aspect of stablecoins that interests me greatly is their utilization for business-to-business transactions. Mr. DePonte, why are stablecoins a better tool than traditional settlement rails for domestic business-to-business transactions?
Thank you so much for the question. We have been active in the space of crypto for the last 5 years and in the stable coins for the last year and a half. And the reason that we are there is because we are a payments company, not a blockchain company. We see the potential of the technology to bring the next generation of payment rails. And we believe that business-to-business payments is one of the places where we will see that adoption first. In terms of domestic payments, there is a very clear advantage that even in places that have adopted real-time payments in more traditional rails, through the transactions with the stable coins on blockchain, businesses can transact outside of banking hours, outside of Monday to Friday, outside of 9 to 5. We see that for many small businesses that we serve, that means that they can get their payments in 2 days earlier. They can get their payments in without waiting for an ACH transfer to settle. We see fundamental advantages in reducing financial costs for those businesses.
Thank you. And recently I had a constituent express a great deal of frustration regarding the cost and difficulty of conducting an international wire transfer to pay an invoice. Mr. DePonte, do you see similar benefits when stable coins are used for international cross-border payments between businesses?
Thank you so much for the question. If there is value on the domestic side, there is even more value on the international side. The cost of sending an international wire is in the range of $50. The time that it takes to settle is in the range of 3 to 5 days. And there might be other costs associated for the receiving party internationally. When we can do transactions that are fast and cheap, and they can settle 24/7, and they can settle in minutes, we are saving those businesses at least in 3 ways. We are putting 5 days of money back on their balance sheet because they don't need to pre-fund the money. In many cases, they can get better exchange rates because they can time when they do the transaction. And they are also reducing the counterparty risk because they don't need to have pre-funded money with their disbursement partners. I have the luxury of being able to engage with our consumers and businesses. And I remember a few weeks ago, I was talking to one of our small businesses, a pottery business out of Texas, who was very clear that the main reason that she was excited about this technology was not the need to reduce the cost of payments, but to grow her business. And she shared that she had to decline a significant order from overseas, from the Middle East, because they could not figure out the way to make the payment. So if we can provide this fast and cheap and 24/7 settlement vehicle, we will be helping her grow her business and millions of other American businesses.
Thank you. I think you shed great light on that. I'd like to shift gears now and discuss the benefits that stablecoins offer to consumers, not just businesses. Mr. Kim, I understand that traditional financial institutions charge 5 to 12% for remittances. How can stablecoins be used to lower those costs for consumers looking to make remittance payments?
Thank you very much for this important question, Congressman. You're absolutely right. Traditional institutions can charge anywhere from 5 to 12% for cross-border remittances. Stablecoins can reduce that to 1% or lower. I'm from New York. In New York, New Yorkers send $10 billion overseas on remittances. We're talking about $500 million that could be spent on the local economy and other good reasons. And this is why it's so important to have a comprehensive federal framework for stablecoins to further spur this innovation and leadership in the United States when it comes to stablecoins, Congressman.
Thank you. I fear that a lack of strong communication between the CFTC and the Securities and Exchange Commission has been why the Biden-Harris administration was so unsuccessful in appropriately regulating digital assets. Mr. Kim, would you be supportive of a joint advisory commission between the SEC and the CFTC to help harmonize them and resolve the jurisdictional overlap?
Absolutely, Congressman. Interagency collaboration and cooperation is critical to getting this right for the United States. We need clear delineation of responsibilities between two agencies, and this is something that the president's executive order also recognized by establishing the working group. And I want to thank you, Congressman, for your leadership with the Bridge Act as well.
Thank you. And I have full faith that this Congress, we will pass legislation regarding both stablecoins and market structure for digital assets. And as we blaze a path forward, it cannot be done without cooperation and communication between the SEC and the CFTC. Thank you, Mr. Chairman. I yield back.
The gentleman yields back. The representative from New York, Mr. Torres, is now recognized for 5 minutes.
Thank you, Mr. Chair. I feel we in Congress should neither romanticize nor demonize emerging technologies like blockchain. Like all technologies, blockchain has constructive uses and destructive uses, and I feel like our mission should be to develop a regulatory framework that maximizes the best uses and minimizes the worst uses. Because without a bipartisan agreement, we will continue to have a dangerously deregulated status quo that benefits offshore, over-leveraged, deregulated actors. And for me, a bipartisan agreement would be a fundamental improvement upon the status quo. I want to follow up on Congressman Rose's questions on remittances. I represent the Bronx, which is one of the poorest counties in America. I have constituents who pay exorbitant fees simply to transfer their own money to their loved ones abroad, whether it be Mexico or the Dominican Republic. My first question would for Mr. Ponte. PayPal is obviously one of the largest payment processors in the world. What is the cost of transferring money via the conventional payment system versus the crypto or stablecoin payment system?
Thank you for the question, Congressman. The cost of sending money overseas varies widely by corridor, but information coming from sources like the World Bank would put the average cost in the range of around 6%, with a target of, I think that the desired target for the World Bank is to bring that down to 3%. But the current average, I think, is in the range of 6%. When you're doing those transactions on stablecoins today, if you're doing that purely from a stablecoin wallet to a stablecoin wallet, depending on the protocol that you're using, it can be as low as 1 cent per transaction in some of the most efficient wallets. That still would not address part of the complexity, because then you would need to explain to the person on the other side, they need to get a crypto wallet, they need to find an exchange. So there is still some friction there. But we are finding experiences that combine fiat and stablecoins for the benefit of the user. For instance,
I just want to simplify it. So the average cost of remittances is 6%. The World Bank has a sustainability development goal of 3%. What is your cost with stablecoin?
When somebody on Zoom, our remittance product, we have enabled stablecoin as a funding instrument. When somebody sends a remittance funded by POUSD, we don't charge any transfer fees. So the transfer fee that is charged to the user is zero. There is still a component on the Forex spread, depending on where that corridor goes.
Okay, so it's zero when it comes to the transaction fees. And then if you factor in the spread for the foreign currency exchange rate, what would it be?
That would vary. I would need to come back to you for follow-up. But
is it less than 3%?
In many cases, it will be less than 3%.
We're living in a time when foreign demand for U.S. stablecoins is on the, foreign demands for U.S. treasuries is on the decline. And it appears to me that stablecoin issuers are becoming the largest purchaser of U.S. treasuries. It would seem to me that the proliferation of stablecoins can dramatically expand the market for U.S. treasuries. What impact would that have on the cost of U.S. debt?
Thank you, Congressman, for the question. U.S. treasuries are definitely being established as one of the assets that are being preferred for reserves of stablecoin. And as the market grows, that will undoubtedly drive demand, especially as American issuers are able to issue more here inside of the U.S. and they're able to ride that increase in the market. I don't have an opinion on what that would make for the cost of debt of the United States, but definitely is one of the aspects where net demand for treasuries could grow.
Or it seems to me economics would dictate that growing demand for U.S. treasuries would lower the cost of U.S. debt.
Of course.
Mr. Massad, do you feel stablecoins should be regulated in the same manner as banks?
Well, not quite in the same manner, but with some similar principles. such as some of those in the Stable Act, like full reserves and capital and liquidity requirements, risk management measures, and so forth. I mean, I've been calling for this for years because not just to address the
You would
risks.
concede that, a stable coin issuer that has no fractionalization of reserves and no
Correct.
lending function
Agreed. They're
functions
not creating-
qualitatively different from a bank,
They're not creating
and
money.
therefore should have its own regulatory framework.
Absolutely.
I see my time is about to expire, so I will leave it at that. Thank you.
The gentleman yields back. The chair now recognizes the chair of the full committee, the gentleman from Arkansas, Mr. Hill.
Thank you, Chairman Stahl, and thank you for your leadership of our important work in the 119th Congress on digital assets. Appreciate the questions of my fellow committee members and appreciate all the witnesses being with us today. Mr. Garrison, today's investors make investments in digital asset projects through a series of exemptions that the SEC has crafted, each with their own advantages and limitations. Could you take a minute and discuss the different exemptions that digital asset projects are currently using to raise money with investors and what the principal obstacles are to that process?
Certainly, the primary exemption that most digital asset issuers rely on is Regulation S, which is a safe harbor for offshore transactions to prevent U.S. investors from even participating. So as a starting point, many U.S. investors are just kept out. For those that do issue to U.S. investors, you typically do through the Regulation D safe harbor, which can only be sold to wealthy investors. So you have to have over 200,000 in income or $1 million net worth to participate in that. In the U.S., there really is no straightforward way to get digital assets out to retail investors in a either registered or exempt offering.
Yeah, so that's helpful to me because this is, what I think the ecosystem has to understand is that not all these needed activities can be taken care of by the commission by itself without Congress. So what would be in your view, the key features of a workable exemption type system that SEC could add to that without Congress?
Certainly. So the SEC could use its exemptive authority to add a new exemption similar to Commissioner Peirce's token safe harbor proposals from a few years ago, for example. So a few features that it could be helpful there is the ability to access retail investors, as well as tailored disclosure items for this industry. Right? So token holders have different interests than a shareholder in a company. The types of disclosures that are needed are completely different in this situation.
Yeah.
So providing that type of information, and you can pair that with many investor protections, individual limitations on how many people can participate, how much they can participate of their net worth. Many of the same concepts in existing securities law exemptions can be grafted over in a way that makes it a balanced approach.
Thank you. I think we've worked certainly with that concept as we've drafted our FIT 21 bill in the last Congress. Bitcoin clearly is the most popular digital asset in the ecosystem. And it's one example where both the SEC and the CFTC have agreed that it's not a security along with Ether. Do you think under the current securities laws, it would be possible for a national securities exchange to list Bitcoin and a security alongside each other? Is that possible, you think, under current?
No, it is not.
Not? You don't believe it is? Mr. Yahim, you agree with that? You think?
I think Congressman, thank you for the question. I think there could be exemptions put in place. It's our view that rather than do this piece by piece through exemptive relief or no action, from the agency, it's really important for Congress to set a clear statutory framework and do that across both agencies. We've seen prior examples where markets have dual registrations at the SEC and CFTC. And the fact of the matter is the rest of the developed world and most other emerging jurisdictions have just called these crypto assets. You have one regulator, one registration framework, we have to work within our unique legal system. But I think in order for our framework to be durable and keep pace with the innovation, the tests and the jurisdictional lines need to be clear and simple.
Mr. Garrison, you agree with that?
Yes, there's without a doubt a need for clear jurisdictional lines and clarity.
You've advocated for a joint SRO to oversee digital assets as a convenient way to sort of sidestep these questions. Still advocating for that? Mr. Garrison?
I'm sorry, clarification for a joint SRO to oversee SEC and CFTC trading?
Yeah.
Yeah, I think that could potentially work great. Any type of communication between the two agencies and coordination on regulations would make sense.
My time's expired, Mr. Chairman. I yield back.
Gentleman yields back. The representative from Texas, Ms. Garcia, is recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you to all the witnesses. I want to do some follow-up to the questions that Mr. Torres was asking with you, Mr. Del Puente. You know, the crypto industry has always boasted about the easier access and the savings of using crypto or stable coins in lieu of remittances. And they talk about all these prices, but the reality is, do we have that many migrants using crypto or stable coins to transmit remittances?
There are thank you for the question so much. The use of remittances the use of stable coins broadly for remittances or for other type of payments is still on the early stages. The vast majority of the use case for stable coins today, where stable coins have been adopted, is mostly on crypto and trading markets. We see some early stages in which both consumers and businesses are using that for cross-border P2P payments or for business-to-business payments, but it's still in very
What percent of remittances today do you think are used or being transmitted through with crypto or stable coins?
I don't have data for that, but my best estimate would be that it's going to be in the low single digits. It's still a very small amount.
It's very small, right? Because frankly, at least when I still remember the first hearing we had on this topic, and I questioned the witness at the time, and he too could not give me a single instant where he said it done, because it's a practical matter. Yes, it may be easier to transmit, but the receiving party has to have the capacity to receive it. It's not something you can just go to the market and buy your milk. Likewise, do you have any data on the breakdown by income of the buyer, customer, consumer, the investor that does use stable coin or does invest in stable coin or crypto?
I don't know that we have that data, but I can consult with our team.
Well, again, it's a question that I've been asking now, it seems like for 5 years. And no one seems to be able to answer that question. Even some of these working groups that are put together and experts come, and you all like to talk about how inclusive this can be and that this will help the unbanked. And it's laudable goals. But the reality is, unless you're really very rich, you're not doing any of this. And the average American just seems to be overwhelmed with this discussion that they don't really even understand what we're talking about. And I think it's going to be really hard for us to get past some of those hurdles. And when you talk about the underbanked, those with limited English proficiency, I think there's a lot of dubious people about what this really means. We know cash. Cash is king. And we really don't want, at least in my district, anybody competing with the US dollar. And I think there's a big hurdle here that we have to use, but we also got to make sure that whatever we're doing, that we do have a framework to protect the consumer, and that we can make sure that they also have a remedies for justice if they get scammed, as Ms. Presley mentioned. So, Mr. Massad, do you think the government-wide mandate to eliminate diversity, equity, and inclusion efforts will change the crypto industry in the long run?
That's a good question, Congresswoman. I'm sure it will. I think it's very unfortunate to eliminate these programs entirely, even if you can find examples of how they've been used that you think are an overreach. The notion that we should eliminate these things, I think is not good policy. Again,
Well, it's
we're-
part of the branding of this industry from the beginning. And as I said, we'll be there for the unbanked, for the poor person, to send a remittance for everybody.
Well,
We'll
I-
include everybody. We're not gonna be like the banks.
Well, no, I agree with you that the industry likes to talk about inclusion. I don't think we've seen that much of that. And to your question about stablecoins, who's using them for remittances and so forth, we might see that use case develop. The fact is stablecoins are mostly used today for trading crypto. Now, if we had a regulatory framework with sufficient protections that people could have confidence that a stablecoin was really worth $1, then we might see people use remittances. And I agree with Mr. Delaponte that the cost of remittances is very, very high, and we should be looking for ways to bring it down. There are other companies trying to bring it down through non-blockchain technologies, and they're making progress in that regard.
Thank you. I yield back.
The gentlewoman yields back. The gentleman from South Carolina, Mr. Timmons, is recognized for 5 minutes.
Thank you, Mr. Chairman. I want to thank the witnesses for being with us today. Over the past 4 years, under the Biden administration and Chair Gensler, innovation within the digital asset sector has been driven out of the United States. Numerous groundbreaking blockchain companies with potential to transform our economy have relocated to jurisdictions with well-established regulatory frameworks. Meanwhile, international competitors have gained a distinct competitive advantage, while American businesses in this space were essentially dismissed by the administration with the message to simply go away. Mr. Fernandez Duponte, as an American company, how has PayPal's digital currency business been affected by the absence of regulatory certainty over the past several years?
Thank you so much for the question. We have been in industry, we have been in the payments industry for 25 years, and we have been, we are regulated in many, many jurisdictions, and we take that regulation very seriously. So when we decided that we were going to enter the space, we went to the highest regulatory standards that we could go. We obtained the first provisional bid license in New York. We obtained the first upgrade for a full bid licensing in New York. And we obtained a limited purpose trust charter out of New York as well. So we have gone the state route in the place in which the regulation was available to us and where we could interact with the system. Definitely, there are constraints on how products are designed that derive from that lack of clarity and that lack of understanding of when one specific token would be considered a security or not. We support a very small number of tokens in our platform, and are mainly driven by utility.
Quick follow-up question. How could clear legal guidelines for digital assets and blockchain technology help non-bank entities like PayPal compete more effectively on the global stage?
We believe that as the world moves to the next generation of payment rails, it is incredibly important for a payment company like us to be involved. As the world moves toward mobile money wallets internationally and toward networks that will interoperate with each other, we see an increasing volume that is going into those rails, and we need to have an ability to compete in that international market because it is happening outside of the US before it's happening in the US.
Thank you for that. Mr. Yahan, how about for Kraken? What would your answer be? How would clear legal guidelines help assist competitiveness of the US economy?
Thank you for the question, Congressman. The clarity needed and provided by the legislation that's advanced over multiple congressional cycles, I think would solve for a key foundational piece of this puzzle, which is regulation for centralized intermediaries. That will allow investment and growth. Now, if you look at the trend that's happened here, both at the level of the project development teams and the innovators, through to the investing community, and then to the centralized markets, we have lacked that clarity in the United States, which has pushed innovation and pushed development offshore. And, it's not just the legal bills. It is the distraction of management and board and our businesses to think proactively about investing. So we're very excited for the change in tone and the cooperation, and we think that's going to drive new innovation here in the U.S.
Thank you for that. I can assure you help is on the way. Last Congress, I introduced the New Frontier and Technology Act with my colleague from New York, Mr. Torres. The aim of that bill is to provide clear definitions within the expanding and often ambiguous digital assets regulatory landscape. As you may know, non-fungible token creators and marketplaces have faced challenges for years due to unclear regulations, while countries like Japan, Singapore, and South Korea have created favorable conditions that have allowed I was encouraged to see a discussion draft of my bill included in today's hearing, and I look forward to advancing this important work later in this Congress. Mr. Kim, can you describe some of the regulatory ambiguity regarding the treatment of NFTs and explain why these assets need to be approached in a different manner than, say, Bitcoin or Ethereum?
Absolutely. Thank you for your question, Congressman. It's important to clarify the non-security status for NFTs, such as artwork, collectibles, and non-financial applications. Imagine an artist looking to hire a securities attorney, apologies to my colleague to the left of me, before selling this art piece. And this is why your bill is so important. Thank you to you and Congressman Torres for your leadership there to clarify this important issue.
Thank you for that. I'm particularly interested to see how NFTs can revolutionize various sectors, but particularly real estate. I think there's a lot of efficiencies long-term that we can use the blockchain, and this legislation would help go a long way in that endeavor. Congress has an obligation to make sure the U.S. economy is the best place in the world to start and build a business, and that's what we're working on in this subcommittee, and I'm optimistic we'll get it done this Congress. Thank you. I yield back.
Gentleman yields back. The representative from California, Licardo, is recognized for 5 minutes. Maybe able to pull the mic over here.
Thank you. My mistake. Wrong button. Thank you. And thank you, Mr. Chairman. Congratulations as well. I appreciate testimony of the witnesses. Thank you all for being here. And I hope that we do move stablecoin bill out with some bipartisan support. And I appreciate the hard work that's been done on all sides. And I also particularly appreciate our ranking member's work late last year to try to achieve a compromise, which I think was a good bill. I am interested, and perhaps I'll start with you, Mr. Fernandez de Ponte, since your company is a well-known national brand, even to those who are not familiar with crypto, and you happen to be headquartered in a great American city of San Jose. I wanted to ask, given the focus that you have and your company has on having a stable payment system, in your testimony, you wrote on page 5 that regular and predictable market policy is necessary for the crypto industry to grow and thrive, and that's certainly understandable. And you clearly support state regulation, an option for state regulation. But I noticed that you also encourage that there be uniform standards, for example, around reserve requirements, around risk management, governance. So then, do you share the concern that Ms. Massad has that there ought to be some federal regulation or oversight over what the standards ought to be if we're going to have state chartered stablecoin?
Thank you, Congressman, and thank you for your leadership in our home city, and it's a great city indeed, San Jose. Yes, we advocate for the need for legislation, and we advocate for a state path. The reason that we advocate for a state path is that when we look at it from our perspective, we're a payments company, and payments are regulated at the state level. And we strongly believe that fully backed, fiat-backed, one-to-one reserve stablecoins are, and issuance of those payment stablecoins is the business of payments, not the business of banking or fractional reserve, or the points that were made here. So we do believe that it is important to maintain a state path. I think that the point on standards is that a state path can coexist with a federal path. We see the advantages of having a federal path as well. We do believe that there should be that general set of standards. That it's important that we have equiparable standards in terms of reserve management between any federal path and any state path. We also believe that it's important to not have a duplicity of regulation. So this idea that they can coexist and share common standards, we think is an important one.
Thank you very much. Mr. Joachim, do you also agree that there ought to be some baseline standards set, even if there's a state charter stablecoin?
Absolutely, Congressman. Thank you for the question. I think, if you look in the stablecoin space, again, with the goal of encouraging a healthy, vibrant, competitive stablecoin market, both state and federal pathways are important.
there should be minimum standards set. I think, from our standpoint as a centralized intermediary, it's slightly different. And if you look at how markets are regulated in traditional markets, whether it's derivatives or equities, a unified federal framework is essential. Today, we operate with over 40 state money transmission licenses. There are only a handful of states that have put in place crypto-focused regulations for centralized intermediaries. So we believe it's imperative to advance and finalize as soon as possible the market structure bill, which puts a clear federal framework in place for exchanges like us.
And then going to Massad's concerns about, on the Stable Act, about extraterritorial enforcement. Shouldn't we give the Attorney General the authority to enforce and explicitly ensure there's extraterritorial application? Since we clearly have many of these entities are abroad. Joachim?
Well, I think it's important, first and foremost, to get a stablecoin bill done. In terms of the cooperation and international cooperation with other jurisdictions, I think that's the most important first step. We've seen stablecoin rules finalized in the European Union. And we've seen the results of those stablecoin rules now go into effect. In fact, those stablecoins that have not taken steps to register as issuers and bring themselves within the regulatory perimeter are being delisted from major exchanges. And I think, again, that is just a case in point of why it's so important to move this forward as quickly as possible. Thank you. I yield.
Gentleman yields back. The representative from Indiana, Mr. Stutzman, is recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you to the panel for being here today. I think this has been a very informative hearing, and one that obviously I'm excited about the future. And obviously a lot is happening. I served 8 years ago, and I remember when this committee had its first hearing on cryptocurrency back in 2014, and Mr. Heisinger was the chairman of the committee. Well, fast forward to 2025, and this House has taken substantial steps regarding a federal framework for how digital assets can be incorporated into our financial ecosystem. Despite the substantial work my colleagues have done on market structure, we saw an administration over the last 4 years that chose regulation by enforcement over permanent statute. The Biden administration engaged in all-out assault on digital asset firms, token issuers, and blockchain developers. Furthermore, the SEC and the CFTC were in a turf war over their jurisdictions over these tokens. And it's my understanding that there was a lot of confusion that resulted in a lack of unity and regulation by enforcement, which harmed emerging technologies and U.S. supremacy in digital asset technology. So while the confusion, since the Trump administration, thankfully, is taken over, Commissioner Pierce has unveiled a 10-point action plan for the SEC's new crypto task force. And I would just share with my colleagues on the other side of the aisle that it's a really good read. And I would encourage you all to read it. One of the points that the commissioner makes is where Congress has directed the commission to impose requirements on market participants, SEC rules will not let you do whatever you want, whenever you want, however you want. Some of these rules will impose costs and others compliance burdens that some may find irritating, and the commission will use its enforcement tools when necessary to pursue non-compliance. Goes on to talk about the direction that he's going, and then of course list off 10 different directives or plans of action. And Mr. Garrison, and I would offer to anybody else if they would like, if you could briefly summarize some of the most important points in the action plan and explain some of the impact that you think that they will have on digital assets if they're accomplished.
Certainly. So the first two priorities, I think, are incredibly important. The first is clarifying the status of digital assets under the securities laws, as well as the second, scoping out activities that are outside the scope of federal securities laws. And I think that really is the foundational question that the SEC has to tackle. Creating a very clear interpretation of how the SEC views when a digital asset that is sold pursuant to an investment contract fits under the securities laws. Everything else flows from that. Another maybe question I would say for the 10 priorities is writing rules and providing guidance on how regulated intermediaries by the SEC can touch digital assets. Now, that would apply both in the context of digital assets that are not securities, as well as digital assets that are securities, like a tokenized stock. Providing a clear pathway for broker-dealers, investment advisors, clearing agencies, transfer agents to be able to engage will really allow the ecosystem to flourish, will allow it to do so under a regulated way and in a way that is compliant and safe.
Anybody else like to comment quickly?
If I could, I think it's a very thoughtful plan. I have great respect for Commissioner Peirce and Acting Chair Ueda. And I think given that and given the legislation that you all have noticed to create a joint committee, I would urge you to let the commissions work on this for a while and get stablecoin legislation in place. Let's learn from that, but not rush on market structure, because I think we could easily screw things up through the market structure legislation more than help.
Thank you. I've got 45 seconds. Anybody else want to comment?
Yeah, just very briefly, Congressman. I think, again, at the risk of repeating myself, this just reflects the new SEC leadership and administration, which wants to work with industry, which is extremely encouraging. And I think it was Mr. Garrison's written testimony where he had a great line, which said, the industry is not looking for special treatment, just fair treatment. So we look forward to working with the task force on next steps.
Okay, all right. I'm gonna end that. That was some interesting stuff, to say the least. How much of that did we cover? Hour and a half of some very interesting stuff. Let me welcome some of the people under the stream. I am going to hop off in 10 or so minutes or so, but Keyston Fenn Coinley, what's going on? Hope you're still here. What's going on, Joe Buddy? It's good to see you, bro. Pookie is in the building. What's going on, Pookie? Listen, interesting stuff there coming out of that. That was their first hearing from the Digital Asset Subcommittee. I wanted to kind of get a sense of who's going to be there, et cetera, et cetera, et cetera. So now we know, they're gonna put together some, bipartisan stuff or bicameral, whatever they want to call it. But it's gonna, they're gonna get their digs in when they can. But I think this is a good idea for sure. What's going on, Keyless? The Lady of Crypto is here. Hydro and Rafi and Master EZ are in the building. What's going on, B? Icewall Cowboy. What's up, bro? Appreciate you checking in. What is that? Is that Frozen 06 with the P? Frozen with a P? What's going on? Enough hearings. We need legislative output. Republicans have both houses now. Let's go. Indeed, we're going to get there, Frozen. We are going to get there for sure. I have no doubt. I have zero doubt about that. What's going on, Zober? MJ. Yeah. Great question, MJ. MJ says, "What's the point of getting rid of Gary Gensler if we are just circling?" Yeah, and I think this is the first hearing for sure. People want to express the little dissents that they have, but they know going forward, this digital asset space is gonna, get the things that we need, and the market structure is going to be a little challenging, but we're going to get that market structure eventually. I truly believe that. What's going on, Yosef? Yes, sir. They are most of the Congress people are clueless for sure. DeFi Daddy checked in. What's going on, bro? Appreciate you being here. For sure. Bank money XRP. That's the same thing I said. I said interesting. Yeah, that's exactly what I said. I said, it's an interesting thing there. So listen, life is good in the digital asset space. The market, again, is doing what the market does. My Hey Anon tokens, man, what's going on right now? 50-some% down. Exciting stuff coming out of the virtuals ecosystem. I don't know. I hope you guys are paying attention to the AI agent, and frameworks space. I hope you guys are, at least looking in to that. And let me know if you guys checked out my Flare Fair videos. Anybody check those out to see how to participate on Flare Fair? Are you participating? That'd be super cool if you could let me know about that. I did highlight Wales 589 channel. He kind of covered everything in about 6 or 7 minutes. I did it the video in 50 minutes, explaining from everything from A to Z. You know how I get. But let me know if you guys watched any of those videos, either my video or Whale 589, and highly encourage you to check out his YouTube channel, Whale 589, and subscribe. I guess he's an XRP guy turned into DeFi on Flare and a couple other places as well, because I think he mentioned ecosystem also. Hopefully we won't get too bad with the internet here. It is 3 o'clock. So, but I did want to just come on here and chat a little bit, say, hey, appreciate you guys checking into the stream. Looks like we are having some internet issues. It is around that time. It is around that time. Was it on the live or a separate Flare video? Joe Buddy is asking. I did a separate video, 50 minutes, Zober. And I commented, I pinned a comment. There were 2 moments of a lag that were pretty bad in the video. So just to kind of caution people about those 2 moments. One is at the very end at 50 minutes and me trying to close out the video. And there was another one, maybe a little past halfway through, that you have to navigate so you can kind of get through that lagging. The Whale 589 YouTube channel, Whale 589, that video again is that's 7 minutes, but he's not going into as much detail that I did, but it is a nice kind of a step-by-step. If you want the quick version where you can kind of pause it, I kind of go in depth on, the whole Flare Fair thing, but I do want to know 2 moments of lagging there. So just understand that. But that Flare Fair thing, I think, is genius in motion. I definitely appreciate those guys doing that, putting that together. Zober says, Flare Fair, outstanding. I myself prefer Enosis. Been there for a while. Nice. Very nice, brother. Very, very nice. So I wanted to point that out to you guys, just to let you know, the YouTube channel, Whale 589, 7 minutes. I hopped on a live stream with him and Crypto Edit the other day. It was a nice space. He's getting his feet wet, new to DeFi in a sense. Really, really likes the Flare deal, but he does good video. He has some good editing skills there. So it is definitely worth it to go there and check that out for sure, and subscribe to the channel, please. Seems like a good guy. Joe Buddy says, I think I am going to spread my Flare state on 4 separate platforms. I got 100% burned searching for yield on VAULD exchange. Yeah, I hear you, bro. I figure spreading it out might help my chances of less shenanigans. Yeah, I hear you. I was just thinking about adding more of liquidity in the DeFi thing, because when you got your wrap Flare and it's just delegated or it's just state, there's opportunity cost with that, right? And that's cool if you're good with it, but it's just understanding what it is. I was thinking about upping my percentage of what I have in Flare DeFi, upping it a little bit, right? Certainly, I don't want to take all of what I have wrapped and delegated and put it in a DeFi, because you still have risk associated, right? It's just always going to be smart contract risk or platform risk. So you want to minimize the risk. I tell people that the idea is minimizing your risk. And so maybe it's 1% of the Flare that you have delegated, wrapped and delegated. Maybe it's 2%, maybe it's 3%, maybe it's 4%. I know some people are going as high as 30 and 40%, right? And so, but I think they understand that risk as well, right? So, again, there's always you don't know what can get hacked. You don't know what smart contract risk some bad people might be able to find. You don't know that, right? So you have to take caution when you participate, right? So we do a certain percentage of what we got wrapped, but the vast majority is just wrapped delegated, right? So you understand what I'm saying? So that is really the key. It's mitigating the risk, right? Right? Because you want to avoid, like they say in the book, ergodicity, you want to avoid, the ability to not recover. You don't want to be in not recover. What's not recover? 100% of your stuff somewhere where there's a chance of a hack, right? That's not being able to recover, right? That's why we talk about multiple ledgers or multiple hardware wallets, right? And multiple browsers that have MetaMask and Rabby, right? It's always about spreading out the risk. And so if you got, $1,000 worth of FLR and you wrapped it, right? I'm not sure, right? You don't want to take all 100,000 of that and put it somewhere, right? Put it somewhere else now besides, because you can still keep it wrapped and go do your thing. But you don't want to take 100% of that, right? That you're putting that at another element of risk, right? But if it's 1%, if it's 2%, it's 3%, it's 5%, right? Now you take a portion and you take that small portion and you can multiply your earnings with that small portion, right? So it's not in not taking risks. It's measured risk to get the extra rewards, because it's just some extra, it's extra stuff, right? I have not messed around B with Cycle yet. Have not. I feel like, yeah, I have not. So the added interest, right? The added interest in being in DeFi with your wrapped WFLR, right? The risk should be, in my humble opinion, measured. In other words, 1, 2, 3, 4, 5, 10%, whatever, so that you understand, oh, okay, I still got 80 or 90% here just wrapped and delegated. But I'm going to take this position, 1, 2, 3, 4, 5, whatever percent, and take advantage of the extra, right? Deal, because right, it's measured risk, I think. So for sure. So some people, some people do they got everything wrapped. And when they get new money, they take that new money, that new dirty fiat, and participate in Flare, right? So it's just understanding, the risk and, the cost, risk reward, and measuring that. Again, if you got $1,000 worth of FLR today's prices, yeah, you don't want to, risk it all doing something, right? It's measured risk, just like we do and with our XRP or with our Bitcoin, with our Solana, right? The vast majority of it is wrapped up somewhere, right? But we still participate in DeFi, right? Maybe we're an Orca, right? Where the vast majority of our SUI is secured, but we're still lending a certain amount of it to get that benefit from lending, right? That type of deal is measured. You got to measure your risk. And so a lot of times people think it's 100% one or 100% the other. That's the challenge. It's financially, that's really it's more risky, that, right? Because you miss out on that opportunity cost. And it was hard for me to wrap my brain around that idea until I read Ergodicity and he laid out some charts and he laid out the thinking behind it. I was like, wow, I never thought about it like that. But yeah, on a path to become a sophisticated investor, you learn that thing, right? The measured risk. Ice Wall Cowboy said that one lady congressman, a congresswoman, had her bald head looking better than yours and mine too. Yeah, it was a good look on her for sure. It was a good look on her for sure. What's going on? Move accordingly. Hope all is well, CJ. Yeah, everything's great, brother. Yosef says, true, great way to break down the risk control, right? And that's just the thing. And it's, it's important to understand. For me, when I understood that not taking that 1, 2, 3, 4, 5, 10, 20% for an opportunity to increase my money was the risk, I was like, what? That's the risk? Man, that was heavy to wrap my brain around that. Right? It was really, really heavy. I was really, really heavy, right? And then when I finally got that thinking of not being able to recover, was very, very interesting to me. It made sense, for sure. For sure. So, Joe, you said you're going to try and, get on 4 different things. So I hope you heard what I said, right? That I shared. Elon is speaking at the White House. Is he really? Agree, especially in new assets. Says Rick Cisneros, what's going on, brother? How are you? He says, agree, especially in new asset class. I will pour big money until these DeFi app get better and more tested through time. Yeah, that's exactly right. Because it's still a risk there. The risk is still there. And you just got to consider that risk is still there. So you have to take measured chances, measured. Right. Yeah, I'm ready to get off.
You ready to get out? Yeah.
Yeah, so you got to take the measured risk. Okay? So, but again, for me, understanding, the opportunity cost and not taking some measured risk was, big turner for me. So, but that flare fair is awesome, guys. It is. I like it. It's a way to get some RFLR if you're interested in that asset, right? Some people aren't interested in the asset. Some people don't see FLR being $1, right? So, no worries, right? No worries, right? You gotta kind of get to where you want to get to on your own, right? Make sure you come to your own conclusions about what's good, right? So respect, definitely appreciate that. And, plan accordingly. But I'm a believer in the FLR ecosystem. Yeah, I'm a believer in what they got going on at SparkDex and Kinetic and Spectre. And I'm excited for the future. Again, in terms of the bag, the FLR token is still in our 10% bag. Still on 10% bag, right? And, we'll go from there. We'll plan accordingly. CJ, the lessons you learn from Celsius, you are so much more wiser. Thank you, Rick. Absolutely. Thank you. I appreciate that. Yeah. Right, absolutely. And that's the key, kind of learning. And thank God, I was able to kind of rebound because I had a ton of XRP somewhere else, right? So but when I say a ton, it was nowhere near what I had on Celsius, just understand that. But at least I still had a ton somewhere else in smart contract. That's right, Yosef, make the money work for us, indeed. So I just realized, bro, very nice. I like it. Miss CryptoCeej got her nails did. Very nice. I like it. Very nice. If you want, there's our nails there. Sharing her nails. So there it is, fam. So I just wanted to share that with you guys. Hope the live stream was interesting to you. Hopefully, I hope I maybe hop on later on tonight. I got to eat, get to the gym, get some stuff done. But I'm telling you, we're such in a great spot right now. I was listening to the Real Vision guy talking about the global picture and the business cycle. I forget the dude's name now. He was going over the tool they use, the macro investing tool. So the picture is still very, very, very bright for the digital asset space. We just got to strengthen our resolve and get to where we want to get to. It's going to be a matter of time. I think it's going to be interesting to see when the SEC chair gets in office. That's going to be interesting. I think for the digital asset space, right? Control risk. There you go, Yosef. That's the deal. Control the risk, right? Control the risk. No comments on your nails yet. Tila says, I wish her mind on crypto was as pretty as her head. Yeah, that's exactly right. So that's why we're here to educate them. We do the live streams and we do the videos to remind us, the average Joe and Jane, of the opportunity, right? That's important because the misinformation, someone said in here in the chat, the ignorance is massive in a big time way. It is massive, massive, massive. So that's why we're here to educate, right? And again, like I said, Keela says, can we see the nails? She shared them, Keelis. Did you not see that thing going across my? Did not see that thing going across my? Okay. Yeah, there they are. Okay. Yeah, so probably a little delay. So there it is, fam. Listen, I appreciate you guys. Nice nail, says Bank Money XRP. There you go. Appreciate you guys checking in. We're so blessed to be early in this new asset class. The definition of vision is seeing it before the masses see it. Rick Cisneros says when all the lawsuits are dropped from the SEC, it's going to be a game changer for these companies to move forward. Indeed, it is. You just gotta be able to see around the corner, see where we are headed. That's the big deal. See around the corner, see where we are headed, and that's why we do these live streams to help people to stay the course, and DeFi is the answer for sure. All right, fam. They like it now. They're saying happy Valentine's Day, everyone. Happy Valentine's Day to you guys as well. I'm gonna hop off here. Listen, do me a favor, guys. Hit that like button on the way out if you didn't get a chance to do so on the way in. We always like to have just as many likes as we have viewers in the stream. And if you happen to be in the 55% or so of people that are hanging out, listening to, and watching the CryptoCeej, do me a favor. If you've been enjoying those hangouts, please consider subscribing to the channel. We're a mad dash to 9,000 subs. We're 105 subs away from getting there, and I know we can get there with your help. So if you've been enjoying the hangouts, please consider subscribing to the channel. And don't forget to ring that notification bell so that you know whenever we go live or whenever we upload a video. I'm going to end this one like I do all my videos and remind you guys of this. Old money doesn't want you to win. But that's okay, though, because you and I, we're already winning. And I would ask you to consider this, or perhaps ponder the idea or notion of living your life permissionless. I'll talk to you guys soon. See ya. Bye.